One of my favorite companies is SJM Smucker, and they just had their worst possible day in quite a while. So I really would like to take a look at this company and of course their fundamentals and do a discounted free cash flow to see if with a 15% drop, is this a current buy right now? So let's get started with this. Now, the big thing to take out of here is that today SJM Smucker did have earnings and it fell 15.59% on the intraday, and this was mainly due to the fact that it has its biggest decliner in the S&P 500 after guidance disappoints on earnings. In fact, we can see SJM slid in morning trading on Tuesday after the food company set its guidance below expectations. Net sales fell 3% year over year during the quarter to 2.1 billion, which is a very big thing, missing analyst expectation primarily due to divestitures and currency impacts for fiscal 2026. SJM forecasts 2 to 4% sales growth, but expects adjusted EPS to fall to $8.50 to $9.50, which is a range within a midpoint below the consensus estimate. And if we take a look at the earnings summary, we can see this a little bit closer. Non-GAAP EPS of 231 beats by 6 cents. However, the revenue of 2.1 billion misses by 50 million. Normally misses aren't necessarily a bad thing, but what is a little bit concerning would be this revenue decrease of 3.2% year over year. Net sales in the quarter was 2.1 billion, a decrease of almost 62 million or 3%. Net sales for the quarter excluding divestitures and foreign currency exchanges decreased by 1%. And also the company provided fiscal 2026 outlook with net sales expected to be between 2 to 4% revenue growth consensus of 1.86%. Adjusted earnings per share to range from $8.50 to $9.50, consensus of $10.27, and free cash flow of $875 million. So right in there, we did have a lot of issues when it came to this earnings report. However, there's actually something a little bit more concerning that is actually not mentioned in this article. And that is, if we actually take a look at their overall earnings report over here in the operating income, we can see that operating income decreased $1 billion, primarily reflecting non-cash impairment charges of $867.3 million and $112.7 million related to goodwill and sweet baked snacks reporting unit and Hostess brand indefinite-lived trademark respectively, and a decrease in gross profit partially offset by $44.3 million, decrease in selling, distribution and administrative expenses, and a decrease in other special projects costs of $16.6 million. Now, why am I actually showing this specific thing? Well, if we actually take a look at the fundamentals, if we take a look at the net income, we can see that the net income for SJM Smucker is actually negative in the trailing 12 months. And looking at the trailing 12 months, we can see that it is at negative $256.7 million. Now, normally this wouldn't be too much of an issue, but because we are basically in the trailing 12 months, it actually messes the entire discounted free cash flow calculator up. So I did have to change a few things here and there to make the numbers actually make sense. But it really didn't change the calculator much. It was just a few formulas here and there. Just letting everybody know that if you guys use it for this, you guys are probably going to get some wonky numbers because, well, it's kind of a rare thing that you would see a negative net income right off the bat. So that's just something to note there. However, I would actually like to go into those specifics a little bit more, because if you don't know exactly what that means, you'll probably be a little bit worried. However, we can see here that the conclusion that drop in the net income for the trailing 12 months of SJM ending January 31st, 2025 was primarily due to non-cash impairment charges related to sweet baked snacks reporting unit in Q3 and Q4 of fiscal 2025 is based on detailed analysis of financial data and corporate statements. This impairment charges, which are non-cash write-downs, very interesting right there, that's a really good point, reflecting a decline in the value of the sweet baked snack segment, likely due to underperformance or market changes, resulted in significant net losses of $0.662 billion in Q3 of fiscal 2025 and an estimated loss in Q4, with a net loss per diluted share of $1. This dragged the trailing 12 months net income from a positive $744 million to a negative of 257 million. A stark reversal driven by these one-time accounting adjustments rather than ongoing operational issues. That right there is major, because you look at that and you clearly see in their earnings that the revenue is decreasing, and yet you see a negative net income trailing. You're like, whoa, this is major issues. It's a one-time thing. I wouldn't necessarily consider a bad thing. Actually, the revenue missing is a much bigger issue than just this. So just letting everybody know that just because their net income is negative, you really have to dig deep as to why it is negative. And luckily we have AI, so it actually makes it a whole lot easier to do. If we hop into now the spreadsheet, we can see the ticker of SJM, market cap of $10 billion with a current share price of $94.41. Once again, if we take a look at this, we can see that it did fall 15.59% today. On the 1 year, it is down 16.89%, and on the year to date, it is down 14.27%, which begs the question, hey, is this a pretty good buy? Seeing that the 52-week range, guys, we're basically at 52-week lows. Really good starting point, $93.93 being the 52-week low, and a high of $125.42. We can see that, yeah, this is NA because we just had a negative, the trailing 12 months is in the negatives. You really can't do anything about that. Even though the new one came in the positive, it doesn't matter. This one hasn't been updated, which is why you're seeing NA on this. They do pay out a dividend of $4.32, which is a yield of 3.86%, a payout ratio of 41.07%, a 5-year CAGR of 4.2, 27 consecutive years of dividend payment. Ex-dividend date passed as of May 16th. Payout date was June 2nd, which most of you guys would have already gotten it. And the dividend frequency, it is of course quarterly. If we come back here now, we can see that the 10-year average free cash flow after this dividend is already paid, it is $857.53 million, which means that the payout ratio is around 53.6%. As of the last year's free cash flow, it is 56.38%. Very close to each other. And I actually do like that consistency. Still, it's getting close to 60, but it's still under 60, which I really do like. Price to free cash flow, we can see that it is a lot lower than what the 10-year average is, which is good to see. You want this to be much lower, seeing that this means that the price is lower and it seems like it's more fair valued. Price of sales is currently sitting at 1.14, and net profit margins, well, yeah, not really surprising right there. Negative 2.92%. Now, the fundamentals are actually fairly interesting. Not starting off on the best foot, we got the net income 2015 of $344.9 million to today of negative $256.7 million. Again, that we kind of already knew as to why that occurred. We already saw the non-cash impairments that happened, so it's really a one-time thing when it comes to it. Not really too much of an issue, but it's still a decrease of 174% on the 10-year. I'm gonna give this a 50%, saying that we've saw this already once in 2023. Into now the free cash flow. It actually doesn't look too bad. Stagnant, but it doesn't look too bad. Now, we take a look at this. We can see that as of 10 years ago, 2015, $491.4 million to today of $815.2 million, increase of 66%, with an average of $857.53 million. All in all, kind of stagnant, not really expecting much here. It is in the positive, gotta give it that. Kind of decreasing. I'm gonna give this guys a 70% for an overall grade for the free cash flow. Into now the revenue. The revenue actually looks really good. We got 2015 of $5.7 million to today of $8.8 billion. Very nice to see. And this is an increase of 54.37%. I'm going to give this guys really easy 95%. It's a really good net income. Into now the assets as a reference only, increasing, but it's not increasing at the same level. It will never increase at the same level as tech companies, so that's still pretty good. Liabilities, though, that's a pretty big jump in 2024. Again, probably because of what we just saw, right? Probably because of what we just saw. Nonetheless, though, assets minus liabilities, flat. I gotta say, I actually really do like it. Very flat, slightly on the positive, but still it's flat throughout the past 10 years. Average total assets of $16.7 billion, average liabilities of $9.1 billion. This is a total difference of $7.6 billion. I'm gonna give this guys a 75% for a grade. into now the cash flow minus the liabilities. Now, only as of 2024 is when things really fell when it came to this. But aside from that, it's just been really, really good. And so far as of the trailing, we can see that it is coming back up as well. In fact, the trailing, it is looking at negative $10.7 billion, whereas the average is negative $2.6 billion. Gave this an 80. I might actually bring this down a little bit because I want to bring this down to like a 60. It's good, but it's not ideal. I do like the fact that they are able to maintain, but maintaining isn't necessarily going up or going closer to zero. And now the shares outstanding, very, very nice. We can see that they are decreasing on the 10-year. However, there are instances where they do issue, especially in 2020. We can see that they did issue a little bit of shares. Nonetheless, though, 2015, we got 119.6 million shares, million with an M, to the trailing of 106.4 million shares, which is an increase. We can see here that the lowest point was 2023 of 104.4, 2024, 106.2, and the trailing of 106.4. Overall, though, this is still a decrease on the 10-year of 11.04%. Previous year to the current year, 1.72%. Honestly, it's not even that bad. I'm going to give this an 85%. They are able to maintain their shares outstanding very, very nicely, and they issue when they rightfully have to issue, which I really do like to see that as well. And lastly, cash and equivalents. They currently hold $47.2 million with an average of $214.22 million. Overall grade, though, for me, 73%. I gotta say, guys, yeah, it's a company. This is actually why I actually like this company, because it's under the radar a lot, right? They make food, right? They make peanut butter. You guys know Jif peanut butter? Yeah, that's Schmuckers. They make their own brand as well. So just because you're buying Jif, you're still technically buying Schmuckers as well. You also got like not the peanut butter, the jam. But honestly, one of the main things I really do like from them too is the fact that they do make pet foods, which, you guys know me, I personally think there's going to be a lot more ownership of pets in the next upcoming decade or two. You could say Chewy would be a better investment. I personally prefer SJM. That's just me. But I honestly foresee a lot more ownership of pets, specifically cats. Now, you do with that information as you will, but specifically cats. So that's why I'm basically buying into this, mainly because of this, really. And I also do like my peanut butter as well. Nonetheless, though, 73%, really, really good in general. And it's a solid C minus. And I guess in school it'll be a C. Regardless. Now, with this massive drop, does this justify to buy this dip? Because there's a lot of people that don't believe it is justified. However, I like to throw my 2 cents on this. Alrighty, so here we have the average free cash flow growth, which is looking at around 11.05%. Now, the net income growth, we can see that this is 128.8%. Again, the negative numbers really mess it up. So I'm not going to choose 128%. It's just not going to happen. I'm going to choose something a little bit more reasonable. In fact, you guys can already see it right there. And then for the average share change, we can see that they have been buying back at around 1.65% in the past 10 years. So I already input the numbers, and let's actually go on with this. Now, for the lowest assumption, I'm going to say 9% for the revenue to free cash flow growth. For the net income growth, 15%, a PE of 8, share change of 0, and a discount rate of 10%. Now, when it comes to the median, I'm going to say 11, 16, 10, 1, and 8%. And lastly, for the highest assumption, 13, 8, 12, 2, and 6. And with this, we get the target share prices, as you guys can see right there of. It's actually really, really interesting because, well, we were kind of already there in some of them. We got $69.38 to a high of $224.65. With a margin of safety of 5, 10, and 15, we got $58.97 to $213.42. So it actually looks fairly interesting because we were just here at around this price tag when it came to the highest 52-week range, right? $125 or something like that. So we can see here is that it's actually looking like a pretty good price, guys, right now at this $94.41 mark. But again, not financial advice. Every investment is the present value of all future cash flow, which is why this calculator is available for free for you guys to use for the 5-year perspective. So make sure to use it, and that way you can make your financial decisions much clearer and much more precise. And now if we take a look at the dividends with this massive drop off, putting in $6,215, this nets you $284.39 in annual dividends. Really, really nice. Quarterly dividends of $71.10 and a monthly dividend of $23.70. So there is my assessment when it comes to SJM. I gotta say, it's a little bit concerning, but honestly, I don't see anything that could cause this company to go bankrupt anytime soon. There really isn't anything to that extent. And the reason why the net income was negative was because of that one-off time kind of thing. So honestly, I don't really see it as, it's a little bit concerning, but yes, but honestly, if you plan to hold these shares for longer, this honestly doesn't show much of anything. It really doesn't. Their fundamentals are still pretty solid C in my personal opinion. And again, this may actually serve itself as a great buying opportunity if you guys so wish to do so. Again, not financial advice. But anyways, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help out with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you would like to join us on the Discord, the link to this in the description below. With that said, peace out, and we will see you all next time.